Sehgal as well as Naresh Mirani joining us on the show to talk about the market setup, the construct that we are working with at this point in time. And Naresh, let me come to you. And yes, it's not looking like a weak market setup, at least for Indian markets. Now you also have the European markets that's joined the bandwagon of a weak footing.
So it seems like the trade which was there for a long time, China down and everything up, is reversing, and we are seeing some bit of a after effects of it on our indices as such. The reason I say that is because the Nifty is down 300 to 400 points. At the same time, the small cap and the mid cap indices have not really cracked. They're down 0.3, 0.5%. So a much larger move on the benchmark indices, as well as the contribution is coming mainly from the heavyweights across the board. So the breadth is very different on the large cap heavyweight index side and then on the mid cap, small cap side. So time for some consolidation. 25,600 could be a support going forward. And we could stay in this range with stock specific price action.
Okay, let's welcome on board Anshul Sehgal as well. Anshul, hi, afternoon. Seems like the first bout of profit taking place today after what's been a fabulous September, right?
Hi, Aisha. Afternoon. Good to be with you. Yes, the first real, correction that we have seen in the markets after a really strong month. But that aside, I mean, if we look at the longer term picture and we go back to COVID times, from COVID, towards the end of COVID and the start of the COVID lockdowns, we saw that the markets went one way and up, whether it was small caps, mid caps, or large caps, they just went one way and up after the crack in March 2020 in the markets. And we witnessed FIIs come in with great gusto between, say, April of 2020 all the way till 2021 November. And thereafter, in the year 2022, we witnessed a cool off in the markets. Particularly the small cap index from the top to bottom fell at one point as much as 29%, ended calendar year 22 at about 13-14% down. And this fall was on the back of FIIs taking monies out of the markets at that time. Come 2023, we witnessed that investors came back in the markets, particularly the HNIs. They came back in the market with great gusto and they started buying in the markets. As a result, we've seen between 23 and 24, the small and mid cap indices go up as much as 70-80%. And so the broad-based rally that we have seen in 23-24 has been just tremendous. Where we stand today is a point where the HNIs, that is the high net worth individuals, are not in an investment phase. They're in a phase where they want to book the humongous profits that they made in this period. Many stocks are up 5-10 times in the last 1.5 odd years. On the other hand, the FIIs have been out of the markets for most of this year, and only in the month of September have they come in with some sort of inkling to buy India. Now, this is an interesting setup where, because of this sort of dichotomy in flows, we may see next year being a tough year or a consolidation year for small and mid caps, while the large caps continue to hold where they are, or even, relatively they are placed more attractively versus small and mid caps. So we may even see large caps go up. But this is a phase where, because flows into small and mid caps are going to be tepid, that we may see consolidation in that area of the market over the next year.
Okay, that's the take coming in the market. Let's address the weakest link today, and that's definitely got to be autos. I mean, not to say that most of the market is caving in, other than a few odd metal names and maybe sporadic technology names. But Naresh, your sense, I mean, dragged lower by Hero MotoCorp, but even in M&M, Tata Motors, TVS, it's across the board selling that you're seeing.
So they need a little bit of a correction given the rally. So if you look at a Hero MotoCorp, recently it has rallied from say 5100 to 61, 6200, taking a pause today. You look at TVS Motors, it's barely seen any correction over the last almost 6 to 12 months, wherein it has just continued in a slower higher top, higher bottom formation. Same is the case with the Bajaj Auto. So out here, a little bit of a correction is fine. Same is the case, Mahindra and Mahindra in the last, say 3 weeks has gone up from 2700 to 3200. So taking a pause, going back to retest some supports, and then slowly making a comeback. So I would expect some more correction across the auto pack. The only one which is an exception is Eicher Motors, which was earlier not a participant and has broken out into new all-time highs. So that's the only one still looks positive out of the whole pack.
Right. Okay. In fact, let me take it across to Srishti as well. She's joining in to tell us about, okay, we will get her in just a second. But remember, Hero MotoCorp definitely has been on the, back foot really, and has been really weighing heavy on the rest of the auto segment. There have been reports of market share losses, them slipping down to number 2 position. In fact, UBS came out with a very detailed account of what's really going on within the auto industry. Let me take it across to Srishti and find out exactly that. And of course, the expectations from the September auto numbers as well.
Well, if you look at the September auto sales estimate, then this time we are expecting a mixed bag because the retail sales actually got impacted because of the inauspicious period for Hindus specifically, that is called Shraddh Pritipaksh. Apart from that, if we talk about the segments that could be outperformer, then the key to watch will be the two-wheeler as well as the tractor segment. While for passenger vehicle and commercial vehicle, we are not expecting much. But on your screen, you will see the big trends that we are seeing panning out for the two-wheeler segment. It's the rural demand that is expected to be better than the urban segment. Passenger vehicles, the elevated discount levels still persist. Apart from that, what we are seeing is not much growth on a month-on-month basis. The commercial vehicles are expected to see a negative volume impact on a YY basis, while for the tractor division, on the back of the improvement in the farm segment, we are seeing almost a double-digit growth number on a month-on-month basis. Let's quickly take you through the numbers then. From the passenger vehicle segment, it's just Tata Motors passenger vehicle that's expected to show a growth of 8% on a month-on-month basis, while for M&M as well as Maruti Suzuki, there's not much expectations. The numbers on your screen. On the back of that, if we talk about the commercial vehicle segment, not much improvement is seen in this particular segment versus the expectations were quite higher. You will see that there is a decline on a YY basis for all the three companies. If we come to the two-wheeler segment, then yes, indeed, the rural sentiment is picking up, and not just that, going ahead in the festive season, the expectations are building up quite well. The dealers are packing up the inventory on the back of those expectations. On a month-on-month basis, we are expecting all these companies to come out with a positive number. The key to watch will be TVS Motors, where we are expecting a 14% jump. Hero MotoCorp too is expected to show a growth of 11% on a month-on-month basis, and there could be a good rebound in Eicher Motors Royal Enfield, and 78,500 is the expectation, while for Bajaj Auto, the number is expected at 4.3 lakhs. And lastly, from the tractor division, like we said, that both the companies are expected to show a more than double the number that was seen back in the last month. And for Escorts, the expectation is of 11,250 units, while for M&M Tractor, 45,950 units is what we are expecting. It's kind of a mixed bag, but the key segments will be that we'll be watching out for how they perform.
Definitely, Shrishti, but hanging there, yes, auto space is going to be in focus given the fact that we will have the auto sales numbers coming in or start trickling in from tomorrow itself. But Hero MotoCorp in particular, that's been actually under immense pressure in trade today, and I believe because of the market share losses that have been triggered by tepid 3-month registration figures. Not just that, the entire two-wheeler space also is in the spotlight on back of a UBS note. So Shrishti, tell us what exactly is UBS highlighting when you talk about the two-wheeler segment?
Well, for the two-wheeler segment, though, the demand expectation is quite robust, but on the flip side, UBS is highlighting that the discount is seen to be intensifying, and that indicates that there is increased competition and inventories are piling up, and that's why the dealers are pushing more discounts. And interesting to note that it's the e-commerce platform where consumers are lured with a lot of discounts, and especially with some bank offers as well, wherein in the likes of Hero MotoCorp, the total discount range between 11 and goes up to 18%, while for Bajaj Auto, the discount is from 12 to 16% of the range. And that is interesting to note that when we compare some of these low-cost ICE variants from the likes of Hero and Honda, that's actually expensive than one of the low-cost EVs, because Ola's the most affordable model is now costing rupees 62,000, with taking note of all the discounts that are available. And in comparison to that, if you look at Hero MotoCorp Splendor Plus, that is the most selling model for Hero MotoCorp, that's standing at around 69,000 of rupees. So that's the kind of market dynamics that is shaping up there. The e-commerce where you are seeing a lot of discounts that are pouring in just ahead of the festive season, and that indicates that the inventories are piling up. And from the likes of Hero MotoCorp as well as Bajaj Auto, these companies are now offering a discount in double digits. On the back of that, UBS also notes that it's TVS Motors that has actually gone ahead and gained some market share. And on the flip side, Hero MotoCorp is on the losing end. They have lost the market share, and UBS continues to maintain their buy rating on TVS Motors as well as Eicher Motors. But for Bajaj Auto as well as Hero MotoCorp, UBS does have a sell rating, and that's why we are seeing both these counters, at least Bajaj Auto as well as Hero MotoCorp, being the top losers in Nifty 50 today. Back to you.
Absolutely, lot of triggers there for the entire auto pack, clearly under pressure, quite a fair bit, as is the rest of the market too.
And it's not looking good for the markets, at least as at this point in time. We are at the day's lowest point and threatening to go below that 25,800 mark for the Nifty right now. We also have Vaishali Parekh joining us on the show right now. A very good afternoon to you, Vaishali. And Vaishali, what's the trend that you're picking up when you talk about particularly the auto pack? We did speak at length about auto pack in terms of what we're expecting from the sales, or what UBS had to say on that particular segment. But what's your take coming in for the entire auto pack, and which side of the fence are you, four-wheelers or the two-wheelers?
Good afternoon, all of you. So yes, actually, there's nothing wrong with the trend still. Today is one such day that we are seeing some good corrective move coming in. But if we were to talk about stock specific, I would still be positive on Maruti and Mahindra, because having said that, of course, our view still continues to be positive on two-wheelers, but still I feel there is a favorable risk-reward ratio on the four-wheeler pack. So I would be now focusing more on those.
Right. Anshul, whenever this, ease off in the market cools off, and whenever we see back, us getting back to that 26K mark or even beyond, I don't know, one can't really, time the market perfectly. But is there value on the table right now? And if the correction were, to go on another 1.5% from here, 3 to 5 odd % on the index, what would you be tempted to buy?
Aisha, if there is one thing I've learned in the last 20 years of being in the markets, it is that one should be looking at earnings growth much more than valuations to participate in the market, to prevent downsides. Both things get taken care of if you've got earnings growth playing into the stocks that you're buying. And so I will be chasing earnings growth if I look for stocks over the next 2-3 years. And dare I say that even a bear market is a narrow bull market. What I mean by that is that if there are, say, 950 stocks going down, then there will always be 50 stocks which will be going up. And history tells us that mostly these are quality businesses where earnings growth is bucking the trend and is really going strong despite the markets losing steam. Now, in such a scenario, I would, that is the scenario that you played out, which is 3-5% market down. I would look for companies where I have a relative certainty of growth. Of course, there is no 100% certainty, but say with a high probability, I can estimate the next 1 to 2 years of earnings growing well. And if you ask me the segments where this will happen, I think that there are multiple pockets in the markets. Manufacturing for one, capital goods. In general, I think that media also is a space which will look quite attractive going forward. The rural economy will pick up slowly and gradually over the coming few years. I think that even the FMCG space, which has consolidated for the better part of the last 2-3 years, looks interesting. And banking at this time is quite reasonable as regards the growth that we anticipate over the next 2 years. So these are some pockets that I will be seeking opportunities in. And then it will be a much more stock specific approach rather than a top down sector specific approach that I will be taking.
Right. But let's put the spotlight then on the delivery space, because we all know that Swiggy has gone ahead and filed a DRHP for an IPO, and that means that the competition will just intensify in the entire delivery space. But how does the new entrant Swiggy stack up against Zomato, and what's in store for the delivery giants as a whole? My colleague Sharad is here with a detailed analysis. Sharad, over to you.
Well, the action has picked up in the unlisted market, and if you look at it, last week they filed updated DRHP with SEBI, and the fresh issue, if you look at it, that comes in at almost 3,750 crore rupees. As per our calculations, the OFS likely to be around 6,500 to 7,000 crore rupees as per the unlisted deals. Now, of course, the key buyers over here in the pre-IPO space, that is something to look out for, and Starry Investor Circle is something which we have put. Amitabh Bachchan, Madhuri Dixit, Rahul Dravid, and even Zahir Khan have made it to the list. And also there are some folks not from the Bollywood but from the sports also. That includes Rohan Bopana as well. Now let's look at how Zomato and Swiggy have panned out, and we have taken their updated numbers from the DRHP also, and we have tried to compare them. Overall, the metrics, if you look at it, Zomato is at the higher side of almost 12,114 crore rupees. PAT numbers is something to look at. That is still not profitable when it comes to Swiggy, but Zomato itself, they have turned profitable as well. These are the FY24 metrics. Average order value remains almost the same when it comes for both of them. If you look at the Q1 numbers, now that's the new numbers which we are talking about. Over here also, Zomato is having a higher share in terms of revenue, and it is still profitable, and Swiggy still has posted its losses of almost 611 crore rupees. Also, now let's look at how the valuations in the unlisted market have panned out. It's expected to be around $15 to $18 billion post-listing. That's the numbers that are coming in the IPO numbers for Zomato. Current numbers, it was earlier $31 billion, but over the last 4 trading sessions, the stock is down 8%. So that is an interesting data point which we have picked out. Now let's look at the growth numbers, how it's panning out. Zomato and Swiggy, especially the food delivery GOV numbers, which is the gross order value. Over here also, Zomato takes the cake. And also looking at the other user metrics also, apart from the food delivery, we have the quick commerce, the dark store growth itself. That is also very aggressive when it comes to Zomato. So a lot of operational parameters which I discussed right now, that is where Zomato is getting the edge, and also when it comes to the market share as well. Lastly, the brokerage stake also is something I like to point out, which came today. CLSA has maintained an outperform rating. Target price is 284, but for the time being, Zomato remains the top pick in the food delivery space, and they have gained metrics across in FY24 and the first quarter of FY25. And interestingly, a very strong statement has come. QSRs are losing market share to aggregators. Now, that is a trend which has been caught by CLSA. But however, one point they have added is that Swiggy will be well positioned once it gets its funding gap filled.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.